Hi there, welcome to Kneppy Invest. In today's September quarter Appendix 4C video, be having a look at intriguing company called Secos Group. Intriguing in terms of what this company is doing, and there's very little doubt that what this company does is going to be a massive growth area over the next few decades. But just because they're in the right space doesn't mean this company will be successful. So I am following this company closely, and I'm waiting for Secos Group to reach a very important inflection point, and that is being profitable on a continuing basis, and not only profitable, but also cash flow positive. And based off their September quarter, first quarter of financial year 23, potentially they are moving towards that point. What does Secos Group do? This company designs and manufactures sustainable or biodegradable materials and packaging. You could call this company a vertically integrated company because they start with the resin. So they design and manufacture the resin. That resin is then sold to converters, which is then turned into film. And that film then is used to create biodegradable bags like poop bags. And some of that film then is used to create environmentally friendly biodegradable bags that are actually now sold in supermarkets under Secos Group's My Eco brand. And some of these bags are now sold in Coles. Now, I personally actually do use some of these biodegradable bags, particularly for the dogs, the poop bags. One little negative thing about these biodegradable bags is they don't last long. I'm talking about maybe 3 or 4 months. Sometimes I try to use one of these bags, which have been on the shelf for a while, and they do fall apart. But that's the whole point. You want them to fall apart because you want them not to be plastic that lasts forever. So they are doing their job. But just be careful. You don't buy a lot all at once and hope they stay usable for over 3 to 4 months. And on 11th of November 2022, Secos Group announced that Coles will be launching their Secos My Eco bag in 770 retail stores. I've yet to see these in the Coles I go to at least once a week, but they are coming. And without doubt, as we become more environmentally friendly through time, and it's going to continue going down that path, we're going to see more and more of these products coming out and less of those plastics that don't biodegrade at all. So Secos Group is in the right sector, but there's going to be a lot of competition for this company moving forward because a lot of companies know that this is going to be a growth area. But right now, Secos Group have their foot in the door, and all we have to wait for is for this company to reach a very important inflection point. And that is one of the reasons I'm doing this video today on Secos Group, because there is potential. They are about to reach that inflection point. Now, just a few facts in regards to Secos Group. This company has been around for a while, and really the company formed in its current sense in 2015 with a merger between Cardia Bioplastics and Stellar Film. Now, Cardia Bioplastics is the company that makes the resin, while Stellar Film turns that resin into that film that is then turned into that biodegradable bags. The current CEO is Ian Stacey. He only has a 0.6% stake in the company, while the largest shareholder is Don Haller, who's also a director, and he has an 8.5% holding in Secos Group. So there's a little bit of skin in the game when you are talking about the director. The current market cap of Secos Group is $61 million. That's at a share price of 11.5 cents. Share price has been significantly more than that over the past 2 years. So this company does go through hype phases. And right now, you probably would say that that hype has waned away. But the hype could return at any second just because of what this company is doing. And the ticker for Secos Group is SES. The main motivation for me doing this video today is the company's September quarter results. And we'll look at those results in the next slide. But before we look at the results, I just want to see how this company performed financially in financial year 2022. So I'm just having a look at the statement of cash flows here. So it says the customers 31.6 million, which did not grow all that much from last year, which was 30.1 million. So there was moribund growth there, not very high growth. Not only that, the company was operating cash flow negative by 4.1 million. Last year, they're operating cash flow negative by 4.7 million. So there was an improvement. But the main thing here is this company in financial year 22 was bleeding cash. In fact, they lost $7.2 million of cash. Previous year, they actually did increase their cash on hand because of a capital raising, a $15 million capital raising. Now, in financial year 22, they started the year with about $11.3 million of cash and finished the year with about 4.1 million. So if they continue down this path, this cash burning trajectory, they will have to raise cash during financial year 23. But if they continue to have quarters like they had in the first quarter of financial year 23, they won't have to raise cash because Secos Group was operating cash flow positive by $960,000 in this particular quarter. They also received $8.5 million in receipts and finished the quarter with $4.7 million of cash. So cash on hand actually increased by $600,000. So receipts grew $500,000 from last September quarter. Product manufacturing operating costs down $1.3 million, which is interesting that product manufacturing and operating costs were down by a fair bit, and staff costs only up $100,000. They only spent about $200,000 on capital expenditure. So when you look at the cash flows from financing and investing activities, not a lot of cash burn right there. And that's why they were able to grow the cash by $600,000 in this particular quarter. Now, just because they had a good quarter in the first quarter of the financial year doesn't mean we're going to see this continue in the next few quarters. And that's what I'm going to be waiting for, just to see if they can continue this momentum over the next few quarters. Another thing to really note is for every Appendix 4C, you don't see changes in working capital unless they mention it in the commentary. You only get to see changes in working capital when a company releases the half-yearly or yearly results. So that is one negative thing about Appendix 4Cs and 5Es is the lack of any changes in working capital. There was a little bit of commentary in the Appendix 4C in regards to that cash flow, that positive operating cash flow. In fact, they mention here that positive operating cash flow was reflection of their effective working capital optimization. And they also mention here heightened focus on customer collection. So they're talking about trade payables and also phasing of sales. And they also mentioned down the bottom here that they have a strong balance sheet with $4.7 million of cash in the bank and no debt. Whether I would describe that as a strong balance sheet simply because cash on hand fell a lot during financial year 21 remains to be, or should be questioned. I'm not sure if I would describe Secos Group's balance sheet as strong. I think it is healthy at this point in time because they have cash on hand and no debt. That means it is healthy, but I wouldn't necessarily call it a strong balance sheet. I have been following this company since they went through that merger back in 2015. One thing you'll notice when you look at the receipts history is even though receipts are growing, that growth is really, really slow. So if we go back to the first quarter, when I started following Secos Group back in the March quarter 2016, they had $5.9 million receipts. Now it's up to $8.5 million. But if we go to the previous quarter, the June quarter, receipts was only $6.9 million. But you'll notice out of the last 6 quarters, 4 of them, receipts have been greater than $8 million. And those 4 quarters are the only 4 quarters in this company's history where receipts have been over $8 million. So I'd like to see a little bit of scale, and the September quarter, the first quarter of financial year 23, has shown that this company is perhaps moving towards showing us some scale. And that means as cash receipts grow, well, cash receipts will grow at a quicker rate than their spending. That means to me, that will mean to other investors, the company has reached some scale. And if they can continue to grow their receipts at a greater rate than the cost, this company will become profitable and they'll be bringing in the cash in the front door and it won't be leaving the back door through increase in spending. Well, there will be increase in spending, but not as a greater rate than the increase in receiving of the cash receipts. And that's the inflection point I am looking for. I want this company to be sustainable because they are a sustainable company, environmentally sustainable company. And I want the company to be sustainable. And what do I mean by sustainable? No more capital raisings, that they can use the cash made in their operations or created in the operations to grow organically in the future. They can't do that right now because they have been operating cash flow negative on a yearly basis and they need to do cash raising. So I want this company to be sustainable in their business, no more capital raisings. I've already talked about how at times there has been a fair bit of hype in this company. And this is the weekly chart for the company going back to 2017. From about 2017, the start of this chart, all the way through to the middle of 2020, share price of this company was going sideways or even drifting down. And then something happened in July of 2020. Share price rose from about 5.5 cents to a high of 20 cents in 1 week and then continued to climb during the next year and a half, just shy of a year and a half, all the way from that 5.5 cents to a high of 39 cents in August 2021. So that was a short period of time, over a 1 year period of time, when there was a lot of hype in this company. There was a lot of positive sentiment, and that was driving the share price higher. No doubt, a lot of that positive sentiment was driven by exactly what this company was doing, and a lot of investors, particularly ethical investors, ESG investors, would have looked at this company and went, I love what this company is doing. I'm going to take a position in this company forever. But then that hype and that sentiment started to shift away, started to wane. And really over the past year and 3 months, this company has faced some negative sentiment. And that negative sentiment has driven the share price from 39 cents all the way down to less than 10 cents. Yeah, the share price actually fell below 10 cents a few months ago. Now onto the daily chart for Secos Group going back to November last year, so almost a 1 year chart here. And 1 year ago, the share price of this company was hanging around 30 cents. And then the share price started to fall in February and really was in a well-defined downtrend from February all the way through to say September, October this year. The share price did hit 10 cents, and 10 cents, and 10 cents tends to be a very natural either resistance or support level. And we saw the share price jump off or bounce off 10 cents back in June. In fact, the share price went from 10 cents back up to 15 cents and then fell back and tested 10 cents and fell through 10 cents briefly during October. Then we saw another bounce back up to 15 cents. Share price is now drifting back towards 10 cents and right now is around about 11 cents. But the share price is still in a downtrend. You could argue that maybe over the past, say, 5 months or so, the share price is going sideways or consolidating. And if it does or keeps on consolidating from here over the next few months, I'd be waiting for a breakout in the share price to the high side. And to the high side, I'd be looking at 15 cents. And if that coincides with some really positive financial news from the company, that would be a good time to take a position, if you like this company, for either the short, medium, or even long term. That's all I have for looking at Secos Group September quarter Appendix 4C for the financial year 23, the first quarter of financial year 23. Things were good for the company in the first quarter, operating cash flow and free cash flow positive. The question I have for the company is, can they continue that momentum in the next few quarters? I'm a little bit doubtful they can. Would it be surprising if they become operating cash flow negative by a large amount in the December quarter, even into the March and June quarters? If you have any questions about Secos Group, maybe I'm pronouncing the name completely wrong, I'd love to hear your thoughts. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.